So my next question with Mr. Shamwail, the Chief Compliance Officer of ICBC. Since we all know that after the implementation of this TBML, obviously the 4 years already been gone, and there is a regulatory compliance requirement is there. How do you see, or how do you feel that it's difficult to, implement this framework into current financial institution industry? And also how the TBML play an important role when we talk about the transaction monitoring system? Thank you.
Thank you, Salim. And Assalamu alaikum and hello, everyone. First of all, I think I would like to thank Dellsons for arranging such conference. I think it's been done after quite a long time. And it's good to, I think one of the advantages for such conferences is that we use to meet our seniors, our colleagues, ex-colleagues, and other industry participants as well. So it's a good socializing event and networking event as well. So well done to Dellsons, Ibrahim and his team. So now coming to your question, Salim, I think the TBML risk or the trade risk was always there. I think since the time we are conducting the trade transactions, the TBML risk was there. But I think it got the attention it required after the issuance of State Bank of Pakistan regulation in 2019. Before that, I think it was not considered as that kind of a risk, especially in terms of money laundering and especially in terms of other money laundering risks. But once SPP regulations come into play, so we have started to look at the TBML risk from a quite different lens and different perspective. And as a compliance person who has been part of the compliance for now last 13, 14 years, I think because this risk has been recognized quite late, post, you can say 2019, so the challenges are also quite significant. Some of the participants have talked about the challenges like the price verification, but I think one of the topics that have been discussed quite less over here is the sanctions part of the trade side. Because we all understand that whenever there's a trade transaction happening, so there are at least 13, 14 checkpoints that we have to check and where we have to see from the sanctions compliance point of view. So there you will have the exporters, you will have importers, the banks involved, different geographical locations, products, services, and so on and so forth. So there are multiple checkpoints from a sanction point of view that we have to look into. And if we look at the sanctions, how they come into being or how they are being made, so I think they are also evolving very quickly. In trade, we understand that maybe the transaction is done at one point of time, but the payment may be done at interval of 90 days or 180 days. And within this 3 months or 6 months time period, when the actual time period comes for the payment side, so maybe one of the parties which was not sanctioned when we conducted the transaction or when we gave a trade loan, but becomes sanctioned at the time of payment. So now that creates a risk. So because it's you can say a risk that goes end to end, and it's a risk that is taken as the transaction move on. So I think with this, if a sanction is being imposed on any party or any checkpoint on the trade, so that can also create a credit risk as well, or it can also goes with other risk as well. So it's a risk, I think, which it's interlinked with multiple links as well, which are there in the bank or in the organization. Now, coming back to the controls or how I think we have developed controls over a period of time. So I think in that area, we can thank the State Bank of Pakistan because they have, through this regulation, they have shown us that how we have to move forward or what are the controls that we have to develop. And especially if you go through the regulations, so SPP has already given what kind of transaction monitoring scenarios should be there, what should be the topologies should be there related to the trade-based money laundering and all those stuff. So we have a documented trade plan which may not be available in many countries, but that is available in Pakistan. So once you have a regulation, once you have a framework, it becomes easier to follow and to then discuss with the relevant stakeholders within the organization and then move forward. But I think the challenge will remain with regards to the transaction monitoring scenarios, because although the scenarios or the topologies have been described and defined by State Bank, but still yet we have to develop those topologies or those red flags, those pre and post transaction red flags that we have to develop within our systems. And most banks may not have their own systems. They have acquired those systems from outside, from a third party or a third vendor. So to incorporate or to change those systems, because the current transaction monitoring scenarios that we have. So they are more in the domain of the transaction banking or the retail banking or the corporate banking. And to now add the and align and to develop those thresholds and all those integrations. So I think that's a challenge. But I think with the challenges as an industry, we have, I think, grown in the trade area quite significantly. And this session that we are having, I think this is the test of it, that how much now the industry is giving importance to the trade and how to do the trade-based, how to manage the trade-based money laundering. Because if you attend such conferences 3 to 4 years back, trade was never the topic or part of the discussion. But now I think any conference that we have, trade-based money laundering is part and parcel of it, and that talks about the awareness and that talks about the risk that we have recognized. So I think we have, as an industry, done quite enough, but still long way to go. But now we can say that every bank has developed their trade-based money laundering policy. They have developed their procedures. Most of the banks have their systems, and if those systems are not there, they're in the process of developing those systems. And lastly, I think one area that we all need to talk about and we need to work, I think we have discussed a little bit about it. In fact, quite in detail about that, it was the pricing element. So I think that is one area that still has quite a lot of room. And that can be, I think, can be done with a collaboration between the banks, between the regulators, between the law enforcement agencies and other partners as well. So I think with this kind of a collaboration and with this kind of enhanced focus that we have done on the trade side, so I think it is now getting the traction that it requires. And based upon that, I think we have developed those systems and we will be continuing to develop those systems.
Thank you.